Welcome back to the Block Fuel Podcast. I'm Avi Mash. Alongside me is Sean Ristow, as usual. And we have a special guest, John Hoffman from Grayscale, who is the Managing Director and Head of Distributions and Partnerships. So first and foremost, welcome to the Block Fuel Podcast, John.
Yeah, Avi, Sean, thanks for having me today. Looking forward to the discussion here.
You bet. Thanks for coming on. It's been a while since you and I saw each other. A whole week. We were just on the panel at STAC, which was pretty well attended, and definitely excited to dive further into this. That said, John, why don't you give us a little background about who you are, how you got into the space, and all of that?
Yeah, absolutely. So I actually started my career in management consulting, got into the ETF business in 2006. I was buying ETFs in my personal account and thought, wow, there's a tremendous technology for delivering investment returns. So started in the ETF industry in 2006. It was a small, relatively unknown industry back then, a little under $200 billion at the time. Today, it's a $10.8 trillion industry, 4,000 listings here in the US. Spent 18 years working on ETFs. At the end of my career on the ETF side, I was running Invesco's ETF business, so one of the top 5 ETF platforms in the world. And the parallel here to crypto is I'd been looking at crypto for the better part of a decade, and the parallels between the two technologies, I just could not stop observing the kind of trajectory and path of these two different technologies. So in the early days of ETFs, people didn't understand them. There was a lot of fear and uncertainty and doubt. It's hard to believe today because ETFs are kind of a mainstream investment vehicle. But back then, I can tell you, we spent a lot of time educating investors about the technology. What are ETFs? Why are they a better way of investing? I think in a lot of ways, crypto reminded me a lot of those early conversations. And it really hit me about 2 years ago that crypto is a technology that was built by technologists. But ultimately, that technology has to be bridged to the people that invest in it. And, I saw a tremendous opportunity to be that bridge. And Grayscale, obviously, as the world's largest provider in the space, I ultimately joined the firm a little over a year ago, and have been working to build out various parts of the platform, mostly on our distribution and partnership side.
So, John, in what ways would you say, like Grayscale, as you just mentioned, very well-known name in the space, how has GBTC specifically influenced the overall ETF market? And with such great power comes great responsibility, right? So just curious kind of how, if you can just dive in a little bit further too on some of that education initially, or, are you talking to big firms? Is this more like individuals? How are you guys getting this out there? You guys have a big marketing team, obviously that helps, but more in your role specifically, how have you guys gone about that?
Yeah, so starting with GBTC. So GBTC launched in 2013, really opened up access to Bitcoin through a future forward, regulated investment vehicle. And, during that time period, the fund has been up over 50,000%. Obviously a good historic return there. I can't say that's predictive of the future return opportunity, but GBTC became, the proxy to access Bitcoin in a regulated vehicle. Ultimately, I think as GBTC uplisted to an ETF, and, we felt really adamant to move that to an exchange traded fund format, getting back to my comments earlier on kind of the efficiency of an ETF, partnering this incredible technology of crypto, arguably the most disruptive innovation, of our generation, certainly within finance, with an ETF. It's no surprise that that's been the most successful launch in the history here. So, what we've done is, really continue to lead what I'd call the digital assets revolution by expanding that capability set. So GBTC was the first product to uplist to an ETF. We subsequently launched another Bitcoin fund, ticker BTC, which is the world's lowest fee Bitcoin ETF, 15 basis points of management fee, incredibly efficient way to get access. And so today, and we can come back to this, we offer a wide spectrum of capability from private funds through ETFs, single asset to multi-asset, active capability, passive capability. It's really about opening up all of those ways and venues to get access to, this emerging return pattern, which is, again, the first new asset humanity's seen in 165 years. It's a super exciting time. We're taking that excitement and, to your point, kind of channeling it into our distribution efforts, which, going back to my comments, a moment ago, there's a massive divide between this technology and, professional investors is kind of how I would loosely call that. We're trying to bridge that gap. And so the way that we're doing that, I think, to your question, Avi, is, really through hand-to-hand, boots on the ground. We're doing over 100 events this year throughout the United States, from webinars to in-person events. We host a series called Crypto Connect, track where we'll be in 15 cities this year, with over 100 attendees, really focused on educating and speaking the language that these people are used to looking at when they're looking at investment products, right? I think in crypto, you hear about Bitcoin. I always hear about immutable, scarcity, all the terminology that really doesn't mean anything to people that aren't crypto native. And so it's really about, taking that, I'll call it Tinglish, like, tech English, and turning it into Finglish that they're used to hearing and understanding, which is about how does this fit in a portfolio?
Yeah.
What can I expect from a risk and return perspective, correlations? Those are the properties that matter to this audience. And this is a $70 trillion market between kind of wealth management intermediaries, or think about financial advisors and institutional segments that are really starting to crave and desire this education. They need to understand it. They're coming to Grayscale for that, and we're investing a tremendous amount to help them make good decisions as it relates to building portfolios of the future.
I think that's well said there. I mean, when you look at Grayscale, I got into Grayscale early on, and the one thing I've noticed is the education part that you put forward is very, I would say, forward, no pun, forward thinking and first. And because I think, with this being a new asset class, a lot of people don't understand it or think they understand it, and then they don't know a lot. And so it really helps drive home, here's how the actual products work. With that said, traditionally ETFs have been for institutional investors. Now with this market, you're seeing more retail investors come into the market. That being said, like, what investor behaviors have you seen towards, the crypto ETFs, specifically like around Bitcoin, Ethereum, and really adding to that, how do the market conditions play into that and the overall performance and strategy?
Yeah. So Sean, let me take this first, just on the ETF track, and then I'm going to come back and talk about kind of the intersection of Bitcoin and Ethereum and
Yeah.
this is happening. So look, I think ETFs are a significant innovation in terms of a technology for delivering investment return. And I draw a parallel to ETFs to other tech platforms. Think about Instagram as an example. Instagram was created as a picture sharing application, right? But when you look at the use cases of it, they transcend way more than just sharing pictures, right? I saw a story one time about a shopkeeper that would post inventory. It was like an inventory management process for them. And my point here is that ETFs as a technology ultimately have created all of these different use cases for investing. So you can buy it long, you can sell it short, you can lend against it, you could borrow, you get options markets developed on them, which enables you to do different risk management strategies. It's a democratic investment vehicle where the world's largest investor is going to enter that vehicle at the exact same cost structure as you and I buying one share a day. And so it's an incredible technology for delivering investment returns. And it's proven to be a more efficient way in many ways to access the return pattern of really any asset that you put in. So that's a major technology in its own right.
Yeah.
Now when you bring in Bitcoin and you put that inside the ETF structure, we have unlocked a whole new world of possibility. And so we think about the market as self-directed, as a channel, which is kind of your do-it-yourselfers. It's about an $11 trillion market. The intermediated wealth segment's about 31, 33 trillion, depending on the day. Institutional at about 35 trillion. And ex-US is another segment. Investors that come from markets that are domiciled outside the United States to the US capital markets, because they're the largest, most efficient markets in the world to access. And so with ETFs, to your point, Sean, the early buyers there in Bitcoin specifically did skew to the retail market. We saw a large population of investors in BTC and GBTC coming from that self-directed channel because they have lower restrictions. They can access it quickly. They've done their diligence on the products. What really excites me is the other side that we saw is the institutional market. Hedge funds, certain pensions, foundations, endowments were coming into the capability for its efficiency of accessing Bitcoin in the traditional rails that they're used to, trading and being in, which I think
really quick, I think it's really important to call out, because you touched on it, but this is the first time you've had a retail market drive into institution. Usually it's institution comes in, they dabble, and then they're like, okay, time to give it out to the retail. It's the total opposite.
Yeah, and some of that is really just based on the institutional process, which what I mean by that is if you go into that intermediary channel, the wealth management intermediary, there's a diligence process a process of, really moving these into that infrastructure that requires time. And so what excites me is today that $70 trillion portion of the market, if I would kind of draw a curve of where it's at, 5% of that market has kind of done the work, understands the technology, and is allocated. 90% is curious, interested, understands they need to do the diligence, hasn't really made an opinion yet. 5% has kind of done the work, will never allocate here, doesn't believe in the technology today, right?
I love the stats.
This is an approximation. The point being that the ETFs, kind of most important point here, is have now created the scaled technology solution for crypto and Bitcoin in the first instance, which is going to unlock all of these use cases that we couldn't even imagine, a year ago. And you're doing that in the native pipes. And people don't really understand that the frictions around the legacy structure, taking fiat. Now I can click a button right in my traditional brokerage account, get access to Bitcoin extraordinarily efficiently at 15 basis points in the case of BTC. That is the breakthrough here. And, the numbers around it, right? We're at $122 billion in spot Bitcoin ETFs here in the US in a year. That's 6% of the Bitcoin supply in 1 year.
I mean, I look a lot at a lot of the ETFs as being, I love to use this term, gateway drug, because like if you're for the average retail investor or for the average investor, they're going to use an ETF. They're probably not going to go buy the underlying asset, but they get into Bitcoin on an ETF and they'll be like, oh, I really like this. Now I want to learn more about DeFi. I want to learn more about all these other ones. And so it kind of opens the door.
It is absolutely. I think Bitcoin is the gateway to crypto. ETFs, are kind of the gateway to investing. I think that's a great analogy. And, we saw that a lot of the buyers of our BTC ETF and GBTC ETF were first-time ETF buyers. And so, now that they've got that experience, they tend to look beyond just the Bitcoin capability and they look at Ethereum. We just launched a miners ETF today.
Yeah, I saw that.
It's ticker MNRS. And so you can click a button and get exposure to 26 publicly traded mining companies, with the click of a button. And so
that's a fun space.
I would just distill the ETF pieces. It makes it simple, easy, convenient, and flexible to access a return pattern. It's essentially like the Spotify of investing, right?
Great way to put it.
Sean brought up a good point of like kind of the rise of retail. And prior to Blockfuel, I had Pounding the Table, which is another podcast that, focused more on traditional equities and so forth. And so we did the research. I think it was like 100 million plus people that were going to like Robinhood, let's call it, like a lot of these new traders that were coming in, day trading during COVID, and so you get this whole swath of young folks coming in. Now, to Sean's point as well, like crypto has been primarily, obviously there's some folks that are older that are in it, but it is a younger, I'd say, technology aficionados, if you will. How do you guys talk to those younger folks that are coming in that are buying today via Coinbase? I thought you brought up a good point about the ability to like short and trade actually on the market and kind of make those, educated decisions there. But have you guys, when you go talk to institutional, is it a different tone of voice, I guess, than when you're talking to some of the retailers that are out there and folks maybe my age and even younger?
Yeah, it's a great question. Let me give you a couple stats here. So first of all, I would say that to your point, the younger demographic tends to be digitally native. They understand the technology faster because they've grown up, on the technology. My 2-year-old daughter and my 10-year-old, son, my kids can access my iPhone and do things on there I had no idea you could do. Right. And so they've just grown up in a digital world. And so the concept of, a digital asset and digital money, they understand it. Right.
Sure.
We believe in long-term investing. So as we talk to that younger, demographic, we really want to, make sure that the real wealth creation is around long-term, patient, consistent investing. And, I think that's an attribute that group does not always think about. And so, that's an element that we consider. What I would mention is $85 trillion is going to transition in the next 10 years from the baby boomers to Gen X, millennials, Gen Z, and that group. That group is digitally native. So you think about, again, all the different tailwinds in crypto. Yeah. One is just a pure demographic shift, right? Having said that, what's really interesting is when we look at the holder base, right? I think Coinbase talks about 52 million Americans have exposure to crypto today. It's nearly 1 in 6 Americans. We've done some studies. We did a poll with the Harris Polling around some of the demographic detail. What was really interesting is, there's a general conception that, the people investing in crypto are young and inexperienced and don't have a lot of wealth. What we found is actually in the data that the demographic that has over $1 million of net worth, held crypto at a higher proportion than any other demographic when looking at it from an income perspective and net worth, which kind of flies in the face of some of the things that we see and think about. This is all people on Twitter, and this is all that type of activity. The reality is it's actually all of that coming together, and I think that's what's driving this growth. I think I answered your question around kind of how we speak to them.
Mm-hmm. Yeah, and I guess just to piggyback that too, not going to get into politics, but obviously with the changing of guard now, we've seen at least more positive language for that. Have you seen that reflective since we're going on 10 days here now of the new administration, but I don't know if you've seen or if you can talk to this, but the inflows of more and more people feeling like, okay, now this is one more good positive tailwind that we have at our backs, that is an administration that is not speaking so negatively about the space. I don't know if you guys have seen that overall from a macro perspective.
Yeah, absolutely. You see it manifest in the price action in the first instance, right? But if you pull that apart a little bit, I would say that, again, this concept with the $70 trillion of wealth and intermediated and institutional, you look at that segment who are professional investors and have generally been underexposed to this asset class, and you say this has been the best performing asset in the world over the last 15 years. How could have you missed this? Mm-hmm. And the reality is, when you pull that apart, there's been very high career risk, there's been very high reputation risk, and there's been very high regulatory risk. So when you factor that into their day-to-day work, they've actually been prudently behaved as it relates to investing. What has really changed is whether it's the regulatory environment that you're alluding to, the product environment. What has changed is they had high career risk, high reputation risk, high regulatory risk. That has actually inverted. I would say today what they're starting to feel is they have high career risk and high reputation risk if they don't understand this technology. And so I think it's a multitude of factors that have driven kind of the inversion of that risk spectrum. Some of it regulatory, some of it the ETF, right? I think that's reduced some of the career and regulatory or reputational risk. But clearly there's a tailwind in the category. And the way that we see that is more and more professional investors, retail investors raising their hand and saying, Grayscale, can you teach me about this? I can no longer not pay attention. Yeah. It's just an inevitability at this point.
Yeah, so to that point, John, we got to wrap up here, and we'll definitely be bringing you back on to dive in further, and maybe we'll bring on some of the other ETF providers too, and have a big party together. But that said, Grayscale has been a big, huge help to the industry. As you said, reputational risk, things like that. Grayscale has stepped out and really put their foot forward to a lot of things regulatory wise. So kudos to you guys for that. 2025 and beyond, what do you see? What do we got? Every minute I feel like I'm getting new stuff out of DC, coming over on the news feed. But what else you think we'll see in 25?
Yeah, first off, thanks for the kind words there, and appreciate the recognition. The firm has been committed to the space for a long time with the idea of helping investors build better portfolios. So I'm not going to put a timeline on it. I'm going to leave this just kind of as a flight plan, a plan of just a general trajectory. I see a world where you have single token, multi-token, so almost like an S&P 500, buffered, risk managed, smart beta, equity thematic, really all of the categories of capability in these simple, easy, convenient, flexible investment wrappers. More and more portfolios getting access and exposure to this. Why? Because it has very unique return properties, very unique correlation properties, and that's what people are looking for when they're building diversified portfolios. Things that have low correlation, high absolute return. I wouldn't put a timeline when all of that product is here per se. I think the other piece that we hope to see is just black and white lines on the regulatory environment.
Yeah.
This industry wants that clarity. We want to
been begging for it.
And we want to operate in a framework that is provided. The reality is, at least in the asset management space, the 1933 Act, 1934 Act, 1940
Long time
Act,
ago.
100 years ago almost. And
Yeah.
so I think as that clarity comes, that is going to be, really actually another phase of accelerated growth, because again, it will provide the clarity and the rules around, the space.
Fantastic.
Well,
Yeah,
John, thank you so much for coming on. I think we were both about to say the same thing there, Sean. But no, thank you personally, and thank Grayscale. Honestly, you guys have been a huge conduit to like really drive this, forward, and I'm excited. I mean, I think we're still at the tip of the iceberg with everything. And that one point you brought up about like the trillions of dollars that is going to be transitioning is something that people aren't really thinking about over the next 10 years, and that's going to be another huge catalyst as people start having that income to push into new products like this. So thank you so much, and we'll definitely have to have you come back on Blockfuel.
Thank you. And Sean and Avi, again, getting back to what I was talking about on the front end, the education piece of this. Thank you for the work you guys do to bring the education, to this market and help people, make better decisions. So I appreciate all the work that you guys do, and you guys are really helping close that gap on this technology. So thank you. Thanks for having me.
You bet. Thanks, Sean.